Hi, welcome to the Market Alert for Tuesday, the 18th of July 2023. So US stocks were led higher by small caps yesterday after New York Fed manufacturing softened the blow from Chinese GDP data, according to the news. Let's see what economic news we've got today. We've got the G20 still, but outside of that, the news at 1:30 for core retail sales. And then industrial production 215. So everything out of the way by the 2:30 kickoff for the Dow. Speaking of the Dow, let's have a look, see what it did during yesterday. And according to the news there, we moved to the upside once more. So absolutely, we moved to the upside. We traded above the 34,571 as well, but we failed to hold, just closing below. But we're having a go this morning. So watch the high of yesterday, because that's going to be a target for the traders today to take out that 34,668. And in the 30-minute chart, you can see that we drifted down, which seems to be the thing these days. We start off with the markets moving lower to begin with as people come in and get our traders get rid of the cash positions, and then once the market settles, we move it back to the upside with the derivatives. And that's exactly what we saw yesterday with the Dow moving back to the upside, above the DP, above the close, above the 50 EMA, and there's the high that we need to take out from yesterday in order to move higher. In the German DAX, a bit of red there, closing below the 5 MA yesterday, but already on track to try and move back above the 89% retracement we've got drawn in from here back to here. We need to get through this, and if we do, then we've got these two levels here, 186 and 2110 to actually take out there. 30-minute chart, also yesterday, you can see the market moving higher to begin with. Then we had the move to the downside before we then came back with the Dow in the afternoon. Overnight, above the DP, sitting on the close. The high is a stone's throw away for this market as well. In the 5-minute chart, so yesterday morning we kicked off with the move to the downside. We got a bit of a bounce in the futures, and then we had the shakeout down to the S2 level there where we found support, and then the market moving back up to the DP before becoming overbought, and then moving back to the downside, which you can see there, all the way down to, again, the same level down to the S2 before being oversold, and then just drifting in a sideways range until the US Open. We had the Empire State Manufacturing numbers, which we saw there, and then the market moving back up with the Dow in the afternoon. Good 100 points from yesterday's news as well there, from, as you can see, trading up very, very strongly there. And then overnight, let's just have a quick look. We can see the markets had a bit of a shakeout down to the DP where it found the buyers coming in, oversold, and we're now moving up. And you can see coming off that close, to be honest, it's a bit of a no-brainer. You can see that they want to gun for the high already, which we have in the daily, yesterday's high, just to take out that 89 and then have an attack on these two and get through and back to the all-time high in the daily chart there. In the S&P 500, still continuing to move higher, made a new high yesterday. Where we are in the bigger picture, because it's the monthly chart you need to be looking at for the S&P, need to take out that 89 because we're coming close to the 78. So the 89 is the one to look out for if we do break the 78% retracement there. In the FTSE, bit of weakness there yesterday as well. European markets coming under a bit of pressure, unlike the US. Red in the chart there, in the daily chart, and we're overbought. Sideways, need to close above the 20-bar moving average, and brace yourself for this mess. That was the 30-minute chart yesterday for the FTSE 100. In the US dollar, continues to move down and starting to move again overnight. Just bring this up, and you can see that we are already starting to see a bit of a move to the downside. This is good for the metals, so let's have a look at those. Kicking off with silver, and it's managed to hold during yesterday as well, closing back above the 5-bar moving average, which is good. We need to take out the 78 and the 89. level to continue the move to the upside. 30-minute chart, bit of a mess, but you can see the shakeout there with the Empire State, but coming back above the low. Overnight we've had a move up. We went up for 30 minutes, we came down for 30 minutes. We've got to stay above the DP, the close, and the averages there, and preferably yesterday's high as well to continue to move to the upside. Meanwhile, in gold, doing its best to move up, but it's got the 78% retracement here, which is drawn from there, projected back. It needs to take this out in order to move higher, and also get through that 89 as well to start making any progress. Yesterday, you can see again slammed with the Empire State news, knowing that full well they were going to bring it back, and it's up in the Asian market. And unlike silver, it's currently above yesterday's high there. So in the gold-silver ratio, you can see that this is finding a bit of support at 78. So don't be surprised if it starts to move back to the upside once more, because that's the way it works. Okay, that's it for this one. Like I say, keep an eye on the high for the DAX of yesterday. It's going to go through it. We know that at some point during today, whether we get the shakeout or not at the start. But that's where the market will be gunning. So look for the re-entries along the way. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.